Hey everyone, so today we are digging into something pretty wild that happened in the market. A huge, and I mean huge, one-day surge for a company called Comfort Systems USA. You'll know it by its ticker, FIX.
All right, let's not bury the lead. Look at this number, almost 19%. That's how much the stock shot up.
Yeah, you heard that right. This wasn't something that built up over a week or a month. Nope, this all went down in just one trading session. A truly massive leap that, you can bet, made a lot of people sit up and pay attention.
So the big question is, what on earth could make a stock just explode like that? And maybe more importantly, what does it tell us about where it might be headed next? For this explainer, we're going to put on our detective hats and look purely at the clues hidden in the trading data to see if we can solve this thing.
Okay, first things first. We need to set the scene. A move this big doesn't just happen in a vacuum, so let's get a little context on what was happening right before the breakout.
So if you look at the timeline here, you can see that FIX was already doing pretty well through September and October, a nice steady uptrend. But what we saw on October 24th, that was not another step on the staircase. It was like a rocket launch. The stock just gapped up from the moment the market opened, and it did not look back, closing at almost $1,000 a share.
All right, now for the fun part. To really get the why behind this surge, we have to become financial detectives. We need to look for the evidence, for the clues that are hiding right inside the trading data itself.
You know, one of the first places a detective looks is for signs of activity, and boy did we find it. Look at the volume. Before this big surge, you had a pretty normal, kind of moderate daily volume, right? Around 300,000 shares traded. But on October 24th, it just exploded to over 1 million shares. That's more than 3 times the usual action. This isn't just random noise. It's a massive signal of intense buying pressure. The market wasn't just interested, it was practically stampeding to get a piece of this thing.
Now, before we dig any deeper, let's talk about a key tool in our detective kit, technical indicators. The easiest way to think about them is like the dashboard in your car, right? They don't actually drive the car, but they give you all this crucial information, your speed, your engine temp, your momentum. They help you understand exactly what's happening under the hood of a stock.
Okay, this right here is our dashboard. And I know it looks like a lot is going on, but don't worry about all that. I just want you to focus on one gauge for a second, the MACD indicator. You can see it's flashing strongly bullish. Now, this is one of the most trusted gauges for momentum out there, and right now it's telling us that the force pushing the stock higher is incredibly strong. Let's call this clue number 1.
But here's where mystery gets a little complicated. To understand the flip side of this, we need to talk about a really critical concept called overbought. It's basically what happens when everyone gets so excited that they push a stock's price up so far, so fast, that it might be getting ahead of itself. It's a major warning sign that things might have gone too far and a price correction could be coming.
And that brings us to clue number 2, which, well, it pretty much contradicts our first clue. We're looking at that same busy dashboard, but find a different gauge this time. Look for the Relative Strength Index, or RSI. See that number? 73.93. Now, the general rule is that anything over 70 means a stock is officially in overbought territory. So while one gauge is screaming full speed ahead, this one is flashing a big bright warning light.
And there you have it. This is the central conflict of our story. It's a classic Wall Street showdown. You've got the unstoppable force of all this crazy momentum slamming up against the immovable object of being technically overbought.
I mean, on one hand, you have the bull case, with all these different indicators just shouting about how powerful the upward momentum is. But then, on the other hand, the bear case is just as loud, with a whole bunch of other signals flagging a seriously overheated situation. It's a total tug-of-war happening right in the numbers.
This analogy really just nails it, doesn't it? The stock is performing with incredible power, pushing into the red line on the tachometer. But we all know you can't run an engine in the red forever without something giving out. The million-dollar question is, can this engine cool down a bit without completely breaking down? So, with all these conflicting clues on the table, where could we possibly go from here? Well, the analysis really points toward 3 different potential scenarios for what might happen next.
First up, we've got the bullish case. In this version of the future, momentum is just too strong to stop. The buyers stay firmly in charge, they blow past that recent peak, and the rally just keeps on going. The engine, it turns out, can handle the heat just fine.
Then you've got scenario number 2, the bearish case. In this reality, those overbought warnings were right on the money.
The stock runs out of gas, and gravity just takes over. The price could easily drop 10, maybe 15% as it falls back to fill that huge price gap it created on the way up.
And last but not least, there's the neutral case. Here, the stock doesn't keep rallying, but it doesn't crash either. Instead, it just kind of moves sideways for a while, basically catching its breath. This would let the buyers and sellers sort things out and find a new balance after that absolutely explosive move.
So we've weighed all the evidence, the powerful momentum, the serious warnings, the different ways this could play out. What's the final verdict from the technical report?
Well, the report's overall technical score comes out to 82.15. Now, on a scale of 1 to 100, that is a very, very strong score. What it tells us is that, even with the very real risk of a pullback, the underlying technical strength and momentum are just seen as overwhelmingly positive.
And honestly, this one sentence from the report's conclusion really says it all. The big picture, the long-term trend, looks really strong. But in the here and now, in the short term, that overheating engine means anyone trading this needs to be really, really careful.
Which leaves us with the ultimate question, right? Are we looking at a rocket ship that's just finished its stage 1 burn and is about to go even higher? Or was this a spectacular, brilliant flare that lit up the sky for a moment but is just about to burn out? The data gives us the clues, but, as always, only time is going to tell us how this story really ends.